Hello everyone, welcome to Forex and Markets YouTube channel. Today we're going to review the price action of the Euro USD of the 25th of October. And it is quite interesting because it gave two really nice trades in New York session that you might capitalize on if you focus on getting similar patterns in the future. So I want to show them to you. And the first thing we can already see is this various liquidity in Asia. I'm not taking too much time on refining it because it's not worth it, and even more considering there's not much liquidity at these hours. Okay, so here, as I told you, we have this bearish channel, and here we have a fake break of structure to the high side, which leaves buyers, premature buyers actually here. So we don't want to buy from here. Okay, actually we would want to sell from here because it gave a valid breakup structure after the trap. This movement, this push to the high side, is a trap for these retails to keep on buying. So when the price taps this zone, it gives in another fake break of structure to the high side. So if you took this POI from here, you could take a valid sell, but just until here, because there's no other liquidity close to this zone. So this will be the target, and I'm not even marking this short because, as I told you, the ratio for me is not the best one. Okay, and even more considering this spread. Okay, so I'm taking it out, and the price just melts from here and takes out this low. So now the whole market is selling at this point, and this is the reason I skipped the London session analysis, because there's no any valid trade other than this one, because as you can see, the price lives without anyone. So now we have something interesting here, because now, as I told you, everyone is selling. We have a very push from here to here, and so this POI gets already invalidated. So I want you to focus on something, that it's this. Now that the price taps again this POI, it gives an internal fake break-off structure. As you can see, the price retraces to here and then comes back to here and then goes low again. So makes a new lower low, creating an internal fake breakup structure. Okay, this one would also be a fake breakup structure, but this one is to the high side. And this is really important, because as you will see, well, as you can already see, the movements that act as a trap usually are the places where the institutional money is. So you want to trade with these people. These people have placed money here, and when they get back to the zone, the price automatically melts down. And now, as you will see, we have another trap here that will become important in no time, as you will see. By the way, this push has been taken already. So now the market sentiment has changed to bullish. And now, watch this. Yeah, the price creates some equal lows here that get confirmed with this fake breakup structure. It is fake because it entices people to, it entices retail traders to buy from here, and we don't want to trade like retail traders. So this would be kind of a trap again. It is enough reason for us to trade? No, not yet. Not yet. As you can see, the equal lows, and even more if the price is so close to what would be our target. Okay, so now as you can see here, we have another fake break of structure confirming the longs. Okay, so we have a huge liquidity zone here. Also, breakout traders enter here because here we have candles with speed that take this structural high. Okay, so now check this. This is something really interesting and important. It's something quite advanced. And being honest with you, I even missed it on the edge because yeah, it's hard to spot these things. But as I told you, this low is a trap. It's a trap because it changes the sentiment of the market when the price retests this POI that led to this push to the downside, and now it can be used to take another trade in this case, of course, to the high side. Okay, and check the ratio because it's crazy. They want to make another higher high. If you don't want to be open until this point, you may take partials here, and the ratio is still quite nice. And look, it takes no time to reach the first target. So focus on these zones, the zones that act as a trap. Okay. And now we have taken this day high, but not just this day high, but also this one, another day high. So now we could argue that we have taken relevant liquidity to the high side, and we've also left liquidity here because the zone that acted as a relevant zone for us now is a super resistance zone. Okay, as you can see, here's a support zone. So people will want to buy from here when the price gets close to it again. And when I say people, I mean retail traders. So if we want to trade against retail traders, we will want to sell right now. Okay, so now we're reaching an important timing, which is 3 o'clock UTC plus 1. Now we could go to the M1. Sorry, and we can see that here we have a relevant breakup structure. This one is relevant because it happens after a liquidity drop, and it's relevant because it goes in the direction opposite of the liquidity remaining. Okay, so if we want to sell, we will be looking for confirmations like this one, bearish confirmations. Okay, so now the price goes down and we have an imbalance left here. So we could mark this POI like this. Maybe you could mark it like this if you want not to miss this trade, or you could cover your entry from this covering this high. Okay, this would be the safest approach, but if you are already high from the of the day, I mean if you are already in profit, you can cover your entry like this because you would be already covering the POI with imbalance, and you would actually get a higher ratio. Here we have 1 to 12, and here we have a 1 to 6. So the difference is huge. Maybe you could even risk to get a stop loss and maybe re-entry again if you would want, but I don't recommend that. I recommend to take your POI like this if you are up in the day, and maybe like this if you are not, if this is your first trade of the day, or if you already had a loss. Okay, we have another confluence, which is this one. We have the MAs going bearish, so here would be our position, and as you can see from that point the price melts. We can go back to the M5, and now we can see that sadly the price takes us out in BE. This is not a problem, this is something that happens, but I recommend you that in cases like this one, you keep monitoring the price action, because look, if we keep playing the price action and we stay on the M5, we can see that now the MAs on the M5 become nice again, and we have a POI on the M5 that may look huge, but as you can see the price perfectly taps and still gives us a nice ratio to target these lows. Okay, maybe we could go on the M1 to check if we could refine this POI, and we could take something like this. Okay, but of course you will be lowering your probabilities of getting tagged in here. The ratio of course would be greater, but as you can see it never tapped the M1 POI. So I recommend that when your MAs look like this, you try to get into the trade rather than trying to get a higher ratio. Okay, so this would be my recommendation, and this one, these lows would be my first recommendation, for the first target. Okay, as you can see, we took relevant liquidity, and from the previous day we had a really bullish push, so maybe we could target here instead, and the price smashes through it like nothing. Okay, so this would be the price action of the 25th of October for the Euro USD. As I told you, try to focus on the traps. Where are the traps and where is the liquidity? If we have liquidity here to the downside, we first create a trap to the high side to trap some premature buyers here, and when everyone is selling, now the market moves to the high side. Okay, here again we can see that this low creates this high, and when this low gets taken, we have a mitigation, a retest of this trap, and then we can buy again. And when everyone is again on buys, we can sell. Okay, the markets work like this, and the price really went low for the rest of the week. So this would be everything from my side. I hope this analysis has helped you. If so, leave a like and subscribe so you don't miss any video. See you in the market.